Welcome to Talk Tickers, where we're breaking down Broadcom's absolute monster of a quarter for Q3 2025. And spoiler alert, the story is all about AI and it is accelerating fast. So let's get right into it.
Okay, so here's the game plan. We'll hit the headline numbers, the big beat. Then we'll dive deep into the AI engine that's making this all happen. We'll touch on the other parts of the business, check out their guidance, and then we'll wrap it all up with our prediction and our official rating on the stock.
So, what did the market think? Well, it didn't take long for investors to weigh in. The stock popped a solid 4% in after-hours trading. I mean, this was a classic beat and raise quarter, and the street absolutely loved it.
And look, the CEO, Hock Tan, he came out swinging. He set the tone immediately, pointing to record revenue of $16 billion. And he made it clear, this wasn't an accident. It was powered by two things: massive AI demand and the incredible integration of VMware.
All right, let's get into the nitty-gritty. Let's see just how much they crushed Wall Street's numbers.
So they didn't just beat, they beat soundly on both revenue and earnings per share. But honestly, the real story, the mind-blowing part, is the operational machine they built. They turned that revenue into a staggering $10.7 billion in adjusted EBITDA. That's a 67% margin. And then they converted a huge chunk of that into $7 billion of pure free cash flow. Just incredible.
Okay, so where is all this power coming from? I mean, yeah, the whole company's firing on all cylinders, but let's be real. The story of this quarter, and frankly, the story of Broadcom's future, it all boils down to one thing: artificial intelligence.
Yeah, this is the number everyone was watching. $5.2 billion just from AI semiconductors. That's a 63% jump from last year. We're talking 10 quarters in a row of just rock-solid growth in their AI business, and you know what? It feels like it's just getting started.
Okay, and then they dropped this, a complete bombshell on the call. Management casually mentions they've locked in over $10 billion in orders from a single, new, custom AI chip customer. This isn't just another win, folks. This is a seismic shift that completely changes the map for 2026 and beyond.
So how are they pulling this off? Well, it's all about their networking strategy, which is just brilliant. They're solving the problem at every single level. First, you scale up, cramming more power into a single rack. Then, you scale out across the entire data center with their super-fast Tomahawk switches. And finally, you scale across, connecting whole data centers together with their beastly Jericho routers.
And this last part, this scale across thing, this is the real game changer. It's how the big cloud players are going to get around the fact that you can't just build infinitely large data centers. They're using Broadcom's tech to stitch multiple locations together into one giant AI brain. It's an incredible competitive advantage.
Okay, so AI is obviously the star of the show, no question. But what about the rest of the company? Well, to get the full picture, you have to understand it's really a tale of two different businesses right now.
And you can see the split right here. On one side, you've got the software business, powered by VMware, and it's absolutely crushing it, growing 17%, shipping new products, just humming along. Then on the other side, you have the non-AI chip business, and it's treading water. Management is basically telling us to be patient, talking about a slow, U-shaped recovery that won't really kick in until late 2026.
So you'd think after a quarter like that, they'd be happy, right? Just meet expectations for the next one? Nope. They went ahead and raised the bar even higher, giving us an incredibly bullish outlook.
And their guidance for next quarter, it's just wow. They're guiding to $17.4 billion in total revenue, but just look at that AI number. It's set to jump to $6.2 billion. That's 66% growth year over year. The acceleration is real, and they're doing it while keeping those incredible 67% margins.
So moving forward, what should you be watching? Well, there are a few key things. First and foremost, all eyes are on that new $10 billion customer and how quickly they can ramp up. We're also watching for more wins in their custom chips, what they call XPUs. And of course, having Hock Tan at the helm through 2030 is a huge source of stability.
Okay, so let's put it all together. Let's synthesize everything we've heard and figure out what this really means for the stock.
Right. With this kind of powerful quarter behind them and even stronger guidance ahead, what's the next move for the stock?
So here's our take. We think another beat and raise quarter is pretty much in the bag. We wouldn't be surprised at all if that AI revenue number comes in well above their own guidance. And as Wall Street analysts scramble to update their models for that massive new deal, we think the stock is going to get re-rated higher.
The key thing to watch, maybe the only thing that really matters, is the speed of that AI growth.
All right, time for the final verdict, the official call.
So, our rating? It has to be outperform. Look, these guys are operating on another level. They're not just riding the AI wave, they are building the surfboard, the wax, and the entire beach resort. They are carving out a dominant, and I mean dominant, piece of the custom AI silicon market. The question is no longer if Broadcom will win in custom AI, it's how much of the entire ecosystem they'll end up owning.
This is not financial advice.